Way before you or I was born, the U.S. had a gold standard where people could exchange their dollars for a fixed amount of gold. In the 1930s, the U.S. dropped away from a strict gold standard, and in 1971, President Nixon abandoned the gold standard altogether. Immediately, the dollar became a fiat currency. This means its value isn't tied to anything tangible. A gold standard prevents the government from doing things like quantitative easing or money printing, which increases the number of dollars in circulation. In other words, inflation. Today, we're stuck in a world of unlimited quantitative easing. In this kind of a world, you may want to own gold. So, let's take a look. But why buy gold? Even Warren Buffett thinks owning gold is dumb. However, these questions and thoughts have been going on for about 5,000 years. Yet, gold has maintained its purchasing power during the same period. Over the last 70 years, gold's inflation adjusted annual return has been about 2.1%. In this current crisis, gold initially fell, but is now back up to around $1,700 per ounce. In response to the current crisis, the Federal Reserve has been supporting the market with activity similar to the first quantitative easing, but this time it may not be finite. That is the kind of environment where gold does well because the Fed can continue to print dollars, but it can't print gold. Today, the government is seriously talking about running the biggest deficit in the history of the United States, bigger than what we had in World War II. So, should you own gold? Well, that's a personal question that I cannot answer. Everybody has to answer that question for themselves. But what I can do is look at the charts. So let's go take a look at gold. And we're looking at the monthly chart on the Spider Gold Trust. The symbol is GLD. For disclosure purposes, I do not hold any GLD shares at this time. As you can see here, simply from the price chart, way back here in 2005 was the bottom, at least as far as this chart shows. But the important thing to take a look at is perhaps that top there, maybe even that top there. From either point, this chart shows a very long-term base in gold. That is one of the best basing patterns I've seen in a long time. And as you can see, the last time we talked about gold, we were approaching the fast line and the MAC was approaching the slow line and moving on through, and that was someplace here in this area there. But let's go to the MAC and see when that was. Well, it was a little bit later than I thought, but it was around this area here. So it's been a while since we've talked about it. But since then, the fast line and the slow line have been heading up and accelerating, and they're still heading on up well above zero, heading toward that 10 level, 8.56. But that continued upward momentum, I think, is going to power on forward. You see here in the histogram, things are looking good. Nice move on up, still heading on up as well. Price rate of change, the same. That basing shorter term base here and then heading on up. Moving into the relative strength index, the RSI, definitely, even going back to 2013, a very long-term trend up other than this drop at that point there. Into the stochastics, pretty much the same thing, had that drop in 2018, but for the most part, we've been heading on up well above that 50 line. We're in the overbought territory, but it can stay up there for a period of time. Here was, say, up to 2 years or so. Moving down here, Williams looks fine as well, that bottom here, and then on up. So back on up here to the price chart. What I would be looking for, at least in this chart, is perhaps a cup and handle. We definitely have the cup. So I would look for a hesitation in the price, maybe as it approaches this level here, perhaps even this level here. But as the price approaches, say, that 175 level on the GLD or a little bit higher here, there may be a hesitation. As the price goes up, hits either that benchmark or this benchmark, watch for the price, perhaps to trail off slowly with slower volume and then head back on up. And once it crosses through that benchmark or the cup top, then off it goes. So now that's only speculation at this point in time, but really the base chart looks good. And for today, that's ChewDog Charts. Thank you.